right, we are delighted to have Abdulrasheed Momoh, the ED Executive Director, Operations, TRW Stockbrokers Ltd. He joins me now. Good afternoon.
Good afternoon. How are you?
I'm very well, thank you, and I'm sure you are well as well. Let's get into the conversation for today. We're seeing, obviously, we've seen in the past higher interest rates, still relatively high right now, and of course the fixed income market has been a beneficiary of that, taking a lot of the shine. Yesterday and of late, we've been witnessing a decline in yields. Average yields yesterday on Nigerian Treasury bills dropped by about 20%. So do you see a further and maybe even steeper decline in rates ahead, bringing into consideration the decisions later this month, MPC?
Well, depending, with our current inflation rate, coupled with even the increase in price hike, we expect to see more inflation rates going to the high side. Well, in terms of the, I cannot actually decide what the MP rates are going to be. I know there's supposed to be an increase, but they will likely try to manage what is on ground, because overall, we are having a lot of things on ground. We're having the increase in inflation. We are seeing increase in yields. We are seeing increase in cost of living. So depending on what the rates, well, depending on what MPC decides, I think, but they'll try to make it, they'll want to balance the whole equation at the end of the day. So we have to leave that to them.
Yes.
But we all know that it's supposed to be on the high side. It's supposed to raise it.
Oh, okay. We'll see what happens. And of course, the data that will guide their decisions come the final week of this month, right? And it looks like investors are making the most of what they have right now. So do you also see perhaps, obviously the fixed income side of things has taken a lot of the attention. There are some analysts that are saying that if there are rate cuts or whatever the decision is ahead, fixed incomes, and with yields declining, perhaps, there could be a shift from fixed income, and equities can be, investors will shift back to equities market. Do you see that happening?
Well, it happens all the time. You see, as a trader and also as an investor, I'm more of a trader. You see that at any point in time, there's always a saying that the trend is your friend. When you cannot go against the trend, if you know there's a shift, there's a paradigm shift from the stock market to the money market, then you move your funds. I think from the last treasury bills that was done, we noticed that there was a drop in it. Even from the recent federal government bonds they did, there was actually a drop. But if you look at it in terms of the stock market, depending as a trader, the kind of stocks to actually invest. If you look at stocks in the oil and gas sector as you speak, we're looking at stocks like Seplat. You spoke about Owando, Eternal Oil. You can mind the kind of returns investors have gotten this year, even investing in only that sector as we speak. So you've seen from what the market went up to, you can see that there's more liquidity entering the capital market now.
Okay, so things are looking up from what you're saying for equities. But we know that so far this month, we've actually largely been in the negative. Yesterday, they were saying it was caused by sell pressures on consumer goods and industrial stocks. And then there was a rally with, banking and insurance. But what are your thoughts on this, and how do you see this? How do you see this shift? We know that today's tale is a little different. We're in the green, but would you say investors are already responding and taking positions based off of the latest petrol price hike within the equity space?
You see, the way I like to analyze the market, I like to analyze the market based on data and charts. Even before the price hike came up, we realized that the market, that's the overall NGX, because that's normally the barometer of what we use in analyzing the market. And we realized that in the period of March was actually the peak of the market. The market hit about 100,000 points. And the market started coming down from that time till date. So what we have in the market is that the market is actually trading lower high. So we've been seeing a lot of the bears have actually been in control of the market since the period of March till date as we speak. But as within this period of August and date, we've been seeing a form of market. I think market is more of range bound between about 94,000 points to about 96,000 points. Today was actually the first time market broke out of a channel. So we expect market to hit about 97,000 points. We are not seeing much gains yet. We're not going to see much gains yet until, so anything that affects on what we are seeing it on the chart and we are monitoring that movement. So we don't expect to see much trend. It's just going to be market is going to be trading between about 96,000 points to about 97,000 points.
Okay, fair enough. So you're focusing on the data, which
yes.
is appropriate. But then, I mean, can we take out of the conversation the effect that the macroeconomic conditions in Nigeria, like the latest fuel price hike on inflation, do you think that has any effect on how investors will choose to move within the sector, how their investments will be affected within the equity space?
The ones that will be affected really going to be in manufacturing sector. Normally, we expect that to happen today. We're going to see. But you see, let me tell you one thing, the way the market plays, for every opportunity when prices go down, you see some interest group coming in. Like if you look at stocks like, as I said, the fuel hike will help prices like the Oandos, the Eternal Oils, the Seplat, you understand? Then the ones that are likely going to be affected most is going to be the manufacturing sector, because there's going to be cost in terms of even transportation. What's hit among might even be the breweries, the Nigerian breweries, and the Guinness, the Unilever, the PZs, you understand? But what I'm saying, at the end of the day, where people are selling into strength, when they're selling to big weakness, there are some investors that will be we call it bargain hunting, that will be looking at these levels to actually buy back into those stocks. So we need to be cautious, because most of these stocks have actually lost momentum beginning of this year. So when you think you are selling off into those stocks, there are some investors that will still be buying into those low prices.
Yeah, I mean, it's a buying opportunity for a lot of investors, right? But we know that these are not challenges that are new to these companies, right? These listed companies, when it comes to FX issues, when it comes to hiking fuel prices, they've dealt with it before. Do you see any of them having hedged against this development? Do you see any of them perhaps, in those sectors that you have, mentioned that will be affected, have any of them hedged against possible, fuel price hike, inflation, and volatility in FX?
I don't think so, because even from the share price, you can see that it's really not good news across the board. I mean, this is the first time in history, I mean, a stock like Nestle not paying dividends. So you can imagine the impact on what the manufacturing sector. This is the first time in history we are seeing a lot of them going into losses, and we are not even seeing any dividend payout. Even from their Q1 to Q2 is still negative. I think a lot of people didn't see this coming. I think it just hit them in such, I mean, the impact was unexpected, perhaps based on government announcement or floating of the naira, and that was now actually created most of the negative impact we are seeing in the market today.
I mean, a lot of things people don't see coming in this country. But thank you so much. Before I let you go, right, what's your outlook for the equities market? Of course, right now, a little bearish, but what's your outlook in the months ahead?
The months ahead is, as I always say, no matter how market moves, I always tell my investors, the way the market is flat now. watch out for trend. You cannot make so much profit anytime buy into weakness and sell into strength. The areas of making 20-30% in the market, that was during the early years, are over for now. But market has a cycle, and the cycle is we expect to see good rallies coming up in the period of December. For the past 20 years, market has only lost about 4 times in the period of December. So from November, you start taking position in buying stocks at lower prices.
All right.
So for now, I don't see any. People should not really panic about the market, because the market is actually a discounting mechanism. It has priced in all the shock absorbers we need to know. Because if the market is supposed to follow what is happening, the current trend, the market would have dropped more than what we are seeing now.
All right.
So I think the market is actually absorbing most of the shocks we are seeing. And I know that at the end of the day, it's still going to be, at the end of the year, the market is still going to be positive.
All right, thank you so much for your insights. Buy into weakness, sell, when it comes to strength. Yes, a great quote there. Executive Director Operations, TRW Stockbrokers Ltd, Abdulrasheed Momoh. It's been a pleasure having you on.